Anastasia, do you think we'll see a 10% correction, and would you be buying it?
Well, first of all, on average, if you look at markets, you do tend to have a 10% correction every single year. And on average, you have a 5% correction every single quarter. So, I think the probabilities, are probably there. But I don't necessarily expect, that deep of a correction this time around, because in the second half of the year, by the way, we're in September, so we have about 4 months of the year left to go. And we have an economy that I don't think is about to slip in a recession because we're heading into September with very strong positive economic momentum, and the Fed that is likely to press the pause button on the rate hiking cycle. So I don't see that economic deterioration being the trigger for it. And the other reason, Alex, I would say maybe 10% is a little bit extended is because there's so much cash on the sidelines. And if you think about why we can't even seem to have a 5% correction without it being bought, is because a lot of investors likely missed the very robust first half of the year. And so they're looking for a chance to get back in. So as long as the economy is not falling apart, which I don't expect, and as long as people need to reposition, I think a lot of these pullbacks will get bought.
When we price in those cuts, why are we pricing them in? Are we pricing them in for normalization? Are we pricing them in because the economy is getting hit pretty hard? Anastasia, does that affect where you want to be putting then cash to work?
Yeah, Alex, I think at some point earlier this year, the cuts were being priced in because it was consensus the economy is going to have a landing and maybe a recession, and the Fed is going to be forced to cut rates. And that's why we were pricing in quite a few rate cuts. But I think now that has shifted quite a bit, and we're on track for a soft landing and the economy that still chugs along. But the reason why the Fed would cut rates even under that scenario is because as inflation trends down towards 2%, if the Fed does nothing, that the real interest rates is actually going to start to rise. And at the current juncture, Alex, I don't think the real interest rate is even restrictive yet, or maybe it's just on the cusp of being that. But if inflation falls, real rates go up, we are going to find ourselves at some point in a place above neutral, and that's what would potentially cause the Fed to cut rates. So I don't think the economy needs to fall apart for the Fed to do that. It's just the inflation needs to continue to slow.